Gold can't be created out of thin air like money, and it has no default risk. And when you're confronted with systemic crises, as we saw in 2008, clearly you want to have your assets protected.
For people who are new to the gold market, I mean, this should be very, very instructive. The demand for physical metal remains strong. We're bullish as we move toward the end of the year. There's a lot of money on the sidelines, people waiting to jump back into the gold market. Just take those dollars and buy and just continue to accumulate month in, month out. We've got a long way to go yet on the upside.
I think the reality is the market is shaping up here for a $400-500 run in the market into a very strong seasonal period.
In the long-term swing of things, when this bull market's finally over a few years' time down the road, you're going to be accumulating metal at prices that are going to look very, very attractive. Just sort of sense that it's going to happen, and you got to position yourself and be ready for it. It could happen anytime. It could happen this week. It could happen next month. But the pattern is still very much in place. There's just so much power underneath this market, the way I read it.
The minute you think of gold as money, that level is, it's a range between $4,000 and $11,000 an ounce. That's the price gold would have to be to support the money supply. I talk to people about gold, and they say, well, there's not enough gold to support the money supply. And I say, well, of course there's enough gold, just a question of price.
When I look at Mr. Obama, and that Mr. Bernanke, and that Mr. Kim Geithner, and Larry Summers, the one thing I will never do in my life is to sell my gold.